Hi there, Kar Yong here, and in this video we're gonna talk about this particular mistakes that I've observed many investors actually fall into this trap, and it's causing them to, number one, lose money, and if not, it's dragging their performance in their entire portfolio. Now, over here, before we talk about these mistakes, I want you to understand that any instruments, any financial market, it's not gonna move off in one direction all the time. Okay, so today we are talking about, let's say, the index, the S&P 500. We are talking about any instruments, let's say, even cryptocurrency like Bitcoin, the commodities like gold, or even the FX market. Okay, it's never gonna be one way up, right? And what you're gonna experience is that over time there will be up and down, up and down, up and down, up and down. Okay, and in today's video, the assumption that we are putting in place over here is, of course, you are believing, okay, that this particular asset, if we use an example of a company, or we can use an example of a particular fund. Okay, if you believe that this asset over here in the long run is gonna be profitable, in other words, the price of this is gonna be long-term towards the upside. Okay, fundamentally, perhaps it's a solid company. Historically, if you look at this fund, you have confidence in it that's gonna perform over a long period of time. It's gonna be sustainable. Okay, given all this assumption, okay, this is one of the mistakes that I see many investors commit to. Okay. Now, I want you to know that this is also driven by emotions at play. Okay, so given that this, right, look at this chart here, right? So let's say we start from the bottom, and when price starts to rally, okay, today you're monitoring this particular asset, and when the price starts to rally, right, that's where you start to come in and think that, oh no, did I miss out on this opportunity, right? Did I miss out on that whole profit that the market moved without me? Right, and that is actually a very important psychology for you to be aware as an investor, because if you're not, then you'll be driven by emotions, and likely what's going to happen is you're going to buy here. Okay, when the market has already moved off, you're going to buy there, and naturally, as I mentioned, right, nothing is going to go in one way up. It's always up and down, up and down, up and down, right? But the idea here is generally it should be going up in the direction. Okay, so when the market starts to come down and take a break, rest a little bit, what are you gonna feel? If today you invested at this high and the market starts to come back down, as an investor, you start to feel a bit panicked, you start to feel fearful, uncertain, you're not sure if, should you still hold on to it? Okay, and that's where emotionally a lot of investors are gonna be affected, and they're gonna make the decision, okay, let's sell, let's cut it off. Okay, because it's not performing, I'm losing money, I'm afraid of it, I'll cut it off. Okay, and then what happens is, because this is, again, the assumption here is this is a solid company, it's a good fund, it will recover and it will start to make more profits. Okay, and again, what this retail investors would see is that, oh no, I missed out on that again, and then jump onto it. Okay, and the cycle repeats, because again, nothing goes up in the same direction all the time. It comes down a little bit, investors sell here, they start to lose money again, and when it starts to go back up, okay, the whole cycle repeats. They are always investing and buying into something when the price is already high. Okay, now today I want you to be aware that, okay, I'm not saying that you should hold on to your losses all the time. You shouldn't do that. But the assumption I want to always highlight here is that this is already a solid company, it's a good fund, that you're looking at it on the long term, right? So over here, if let's say you're looking at a period of maybe a year, okay, that you're ready to give this time, you are looking for investment horizon to be at least a year, then if this is happening within, let's say, a month or 2 weeks period, okay, it's a short-term thing, you shouldn't let that affect your investment decision too much. Given that everything still stays status quo, it's still a good company, it's still a good fund. Okay, so I want you to be aware of that. Now, what you should be doing instead is the exact opposite of what these retail investors are committing to. Okay, so understand that everything is gonna go up and down, it's never in the same direction all the time. Then as a smart investor, what you want to do is you want to accumulate and invest into, that's your opportunity, when the fund or this particular asset is actually in a drawdown. That means when it's coming down, it's taking a break. that's your golden opportunity to be investing in. So the idea here is you are able to scoop up somewhere when it's at the low, so that when it starts to go back up, psychologically it helps you, because in a very short period of time you'll be able to see the profit. You can protect your capital perhaps. Emotionally it's easy to manage. Okay, so what these retail investors are doing, if you do it the opposite, that makes your whole investing journey way easier. Okay, and not only that, you're actually making way more when these retail investors might be struggling and they're losing out on their capital, on their funds. Okay, so I want you to be aware of this. Okay, and why I'm saying this is because I've been observing, right, many of the retail investors, doesn't matter today if you're someone who's very active looking for stocks to trade, or you're someone who is passive. Okay, I observe a lot of investors commit to these mistakes. I thought it's a good time for me to share with you this perspective, hopefully to make you aware of it so that you can learn from those lessons and never commit to it, so that moving forward you'll be improving on that and ideally help you to limit some of these unnecessary losses, and perhaps you'll be even able to make more money from it. Okay, and I want to share with you this also because I've been recently, right, for the past 1 year, I've been very active right now in the stock market, trading the US market, investing into the US market. And one of the brokers that I'm using, of course, is eToro. And on eToro, they do have this feature where I'm able to share my trades very publicly, very openly. And of course, the investors on this platform is now able to look at the portfolio of mine, and if they like it, they'll be able to copy it. Okay? In other words, whatever trades I take, whatever investment I take, they have the ability to just follow suit. Okay, and this exact mistakes that I have been describing and sharing with you for the past maybe a couple of minutes is exactly what I observed in all these investors on eToro as well, right? When my equity is going up, okay, again, I'm not someone who's always up making money, right? I do have losses as well. My portfolio might have drawdown as well. But what I observed is exactly this. When my equity is going up, that's where a lot of investors are coming in, deciding that, okay, I would like to follow you, copy whatever trades and investment ideas that you are doing, and then when my portfolio is in the drawdown, that's what they're gonna do. They're gonna exit, they're gonna stop copying, and most of the time, these are the investors that will lose money. Okay, but if you take a look at my portfolio today, I might drop a link below in this video over here. If you click it, you'll be able to see my portfolio performance. Okay, it's always up and down. Okay, so but at the same time, I can share with you that individually my portfolio is going up, but many of these investors, if they're not aware of this, okay, what's going to happen to your capital and portfolio? They're likely losing money, right? Because the next time my portfolio increase, they are jumping back in, and the next time my portfolio comes down, they exit. They're always losing money, but as my portfolio is in a constant growth. Okay, so I hope that sharing with you is not just about theory, but it's a very practical thing that I'm observing happening right now. Okay, and I hope this video is able to reach out to as many investors as possible today. If you're following me on eToro, I hope you learned this as well. Okay, if today you are planning to follow me, follow the principles that I'm using in investing, right, for a period of, let's say, 1 year, okay, give it at least 6 months to a year before you jump to the decision on whether you still want to continue or not. Okay? But of course, if today you decided that my style doesn't match yours, that by all means, right, then you shouldn't be even following. Okay, don't jump in and out all the time. Okay, and of course, for those of you who would like to pick up the skill set of investing, we do have a smart investing challenge, a 7 days course where it's complete, it's holistic. I'm sharing with you exactly everything I know, my experiences about investing, and of course, inside you gain access to all the toolkits that I use to decide which kind of stock I want to invest in, which kind of stock is something that I would stay away from. Okay, again, I'll drop the link below. Okay, so I hope that this video here is something is able to benefit you, is able to give you a different insights to help you in your own investing journey. If it does, okay, share with me in the comments below what is one lesson that you pick up. How are you going to implement it? And of course, if you have not subscribed to our channel, make sure you do that so that when I release the next video, you'll be the first one to be notified. Right, so with that, I'm going to see you in the next video, and all the best to your trading and investing journey.